Hi, this is Mark with your analysis for the week commencing the 6th of January. The fiscal cliff drop for the US economy was averted last week, allegedly. Not really, but the US dollar surged last week, as did stock markets. All very silly when you consider what's really going on at the moment. It's all smoke and mirrors, and the problem has simply been kicked down the road for a couple more months. And the next thing that's on the horizon is the US debt ceiling needs to be raised yet again above its current 16.4 trillion. So where does it leave us as traders? Well, if you want to be a conservative trader, then you simply wait it out and you look for bigger moves off longer time frames. We said that this Euro USD chart at the moment is not giving a great deal away. We did have a move up. We had the break in December, which is a breakout. Price has now stopped at an EMA, but for the euro, I would be more likely to look at this from smaller time frames. This is the weekly, and I took smaller time frames down to a weekly chart. Now, if you want to be conservative, the way I will play this is as follows. 129.00 is a major area of previous support and resistance. It is a 61.8 fib, and it is a major weekly trend line that goes back to last June. Therefore, if you want to be cautious, I would be looking to place an order to long anywhere around 129.30, this area, for a potential move up and walk away. If you want to trade intraday, this is a Euro USD on a daily chart. What happened predictably last week after the drop? Where did it stop? Almost to the pip on Friday at 130. So 130 is clearly a major area. I showed you last week, this is a 4-hour chart, and this is what I was explaining about bounce trades. From a bounce point of view, I was explaining as the week started that you could look for potential shorts of 133.00, and it did it to the pip, and then longs at 31.70, which didn't. It stopped there. I longed, and that one went on to lose. The way you play these bounce trades is as follows. You basically take every one that comes along. Now, pre-Christmas, I had shorted the Euro USD here. This went on for 2 days before it lost. Then the next area in the sand we were interested to short was 133, that one won. Then looking, because resistance has now become support, looking at 31.70 to long, that one won, that one won, and then last week I was saying about this 133, that one won. So you have a win, a win, a win, a win, a loss, a loss. Statistically, you will be in profit. What happened next after a break of a major area of previous support and resistance? You know the drill by now. We got a clear break below. The very next candle came up and touched it almost to the pip, and it promptly fell away 170 pips. Where did it stop on Friday? It stopped to the pip at 130. So a very simplistic way to trade. However, you need to have the courage of your convictions, and you need to take all the trades, because if you start to lose your nerve, Murphy's Law says that you will miss the winners and you will only catch the losers. And as I've just shown you here, we have a loss, a win, a win, a win, a win, a loss, a win, a win. Equally, you could just trade from 1 or 2 pairs at the moment. And I tell you many times about looking for clues, and I'll show you one on the Aussie dollar in a moment. That was a very good candle for a reversal candle here. This was clearly indecision at the top here, and we also have indecision candles down here as well. So simplistically, from support, resistance and candlesticks, there are opportunities to make profitable trades. This is the Aussie dollar on a 4-hour, just to show you what I mean about looking for clues. I said last week when price was down here, consider shorts back down at 10500, and I always talk about looking for clues. Well, this was a clue on this candle because we were outside of Bollinger. The next one spiked up. The real big clue here was this. This is a spinning top indecision candle. It's failed to break a double top. As it turned out, this then became a shooting star pattern. That was a major clue. If you were going to short this pair, that was the one to take. Now, back to Aussie dollar on a weekly. I showed you how in recent months we have had lots and lots and lots of winning trades, simply longing and shorting of fibs. And once again, what happened over Christmas? We had this spinning top candle, sat on 103.70. It's indecision time again. Bang, off it goes again. So, if you're going to trade this from a weekly, yes, we broke the trend line, but the fibs seem to be more important on this than anything. as I've shown you on many occasions, I am simply interested from a long-term perspective to long here and to short up here. And again, when you start to get up here, you're looking at multiple reasons, but particularly the 78.6 fib. Look out here, once, twice, 3, 4, 5, 6 times, going back to August, September time, on 6 occasions, price has failed to break this area. Therefore, probability says it probably won't next time. So, once again, if you're going to trade bounces, you take every one that comes along, because otherwise Murphy's Law, you will pick the one that loses. And that's the area for me on the Aussie dollar, trading from a weekly. On a daily, once again, go down to 4-hour charts, but look at 10500. Pin bar reversal candle, and it does suggest an upward move. Stochastics have rolled up, so it may break this time, but if it breaks and closes clearly above, then you start looking at an M2 breakout. But till that happens, I would be interested. 105, looking for clues to short again. As far as a long goes, intraday, what happened was earlier in the year, back end of last year, price came down on a number of occasions and only got as far as the 200 EMA. It didn't come all the way down to the 300, and it did it here as well. This occasion it spiked through, this occasion just missed. So I will be interested intraday on a 4-hour chart anywhere around 103.50. This is the dollar Swissy, and the dollar Swissy last week, I'm showing you how I will be interested to long at 90.76 area down here. I explained how the weekly Bollinger had closed here, which was a clue that price was at least struggle at this area. So you had the potential long here. More conservative entry was to short at 9200, and I did, and it lost. And what happened at 9200? Well, 9200 price came up, it stopped to the pip, an indecision candle, and therefore I shorted. I know some of you then shorted at the 200 EMA, and it still went through. And we had Friday's NFP, then price rolled back down again, and a 5-8 cross forming. So the areas on the Swissy, at the moment they're really not clear, but the main areas to be considering, looking for clues on 4-hour charts, 9200 and 9300. If it breaks below 9200 once again, then I will be looking for an M2 pullback short back down to 9070 area. This is the CAD. In recent weeks I showed you how we'd had a trend line break of a weekly trend line. I'm going to move that now because we appear to have a new one somewhere around this area. This is potentially still a triangle breakout. Theory of a triangle breakout, you know by now. Measure the size of the triangle, roughly 600 pips, and it should be reflected and moved down. Therefore, on this pair, there was extremely good CAD job news last week, and there was even the positive NFP should help the CAD as well, and yet really we haven't got the move. We're still bouncing in this area. Conservative entry is to wait for a break and close below the trend line, and then a pullback with a view to short, or intraday. I said last week when price was down here at 9900 was the first line in the sand. If you really want to be conservative and you want to walk away and leave it, then I will place a short entry just below 100 and walk away. But intraday, look at 9900 for potential short. So euro pound, normally one of my favourite pairs, very messy lately, not really been liking it. I don't like the idea of longing up here because we've got the monthly 55 here, we've also got the weekly 55 here, so there's a lot in the way. More conservative entry is a pullback anywhere around 80.60, 80.70, which will be an intersection of this daily trend line, 61.8 of the recent move. I will be interested to long there. Pound on a weekly, and again, I said in recent weeks, pound has been bouncing between 160 and 16300. Nasty spike last week with the NFP, but those are the areas. Once again, you look at 16300, price has failed to break here, 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 and here on a weekly chart, and this goes back to April of last year. Now at the moment, we've got a 5-8 cross forming, we have stochastics rolling over, and we also have MACD divergence here on this weekly. Put a line on here, you can see how price here on MACD appears to be going down, and in actual fact here it was level. But these are all clues that we could be on for a move down. So how do you play it? Well, 160 is obviously the main first area in the sand, and therefore I will be interested to long here. If it breaks, then I will be interested to long down at 159.30 area, which is this 55 moving average and 5900 just below it. We also have the Bollinger Band coming up here on the weekly. If it continues to come up, that will support the theory of a long. If it opens, I will start to think about potential shorts. Same pair on the daily chart. On the daily, what you want to be looking for, as I just said, is bounce back up at 160, potential bounce back down at 161.50 with your stock just above the 200 EMA. There is a pound interest rate news this week, so you need to be very careful around that time. But again, this is on the daily chart. It's a pin bar reversal at 163.00. That was a double top which failed to break. So the main areas on here are 160, 161.50, and if we go on and run again, move back down from 163.00. The yens, I have missed the yens. I was too conservative with them in the weeks up to Christmas. This is a monthly chart. I was looking for a break and close at 8300 and a pullback, and it just simply set off and never stopped. Remember, Mary in the forum, Trade Spotter, has had hundreds and hundreds of pips down to these yen pairs in recent weeks. So if you want advice on those, you probably best pop along to the forum, Pierre's Corner, and have a word with Mary Trade Spotting. And say, I know she made 200 or 300 pips on, I think it was the Euro Yen last week, so that's the one to play. It's not my favourite pairs, any of these yens, to be honest, and I still would prefer a major pullback. Now, 106 was the first one. This was the breakout, the pullback, and the move up. And if you move that as price moves up, you start to move your lines up as well. So we're 110, we've then got this 111 and 12 area. So 112, anywhere around here, potential big pullback. Yes, I will be interested. At the moment, it's just for me, it's in no man's land. I need pullbacks. Okay, options, as I said at the beginning, either sit back, play off weekly or certainly longer term time frames, look for major trend lines, fibs, EMAs, and all other areas of support and resistance, or as I've shown you, you can trade the bounces, as I showed you on that Euro USD. Simple, take everything else off and look for candlesticks and previous areas of support and resistance. Have a great week.